successful trading. I thought I'd like to talk with you today about 7 pillars that I call of a successful trader. These are often found in the marketplace, and some of them are quite common. You might hear of some that will talk about 3 or 4 or 5 of these categories. I look at this as what's necessary to have a completely well-rounded live trading personality and set of circumstances. You want to make sure that you prepare ahead of time to be the trader you want to be, and to not just make money, but keep the money that you've made. This requires, in my estimation, all 7 of these pillars of a successful trader. The first one is, of course, proper training and education. I've talked about this before in other video clips. It requires the right combination of education, not just any education, not just some free education offered out there that may not be complete, but the right combination of education, tools, and strategies that you then learn to master as in a demo account and then also as a live trader. The second one there is dealing with a successful trade plan. You'll never be a successful live trader unless you have a successful trading plan that you, again, master in a demo account and then also to stick to as a live trader and not vary from. Now, sometimes your trading plan may allow you to flip-flop between one trade strategy and then another depending on the conditions of the market. But you must learn how to discipline yourself to that trade plan as you've written it. The third area is dealing with risk management. And risk management is all about how you determine the size of your account, the size of the lots, the number of lots you're trading, the percentage of your account, how much of your trade account you're going to expose to the market at a time, which determines what kind of margin of error you have and whether or not you can ride through a certain swing in the market successfully to a profitable trade. The fourth area is dealing with money management. And money management is, again, is similar to risk management because they're interrelated. But money management is going to be helping you to deal with the decisions that you make about how much money you start out in your account. For instance, I teach my students to never start trading live with more than a small amount of money, $500 to $1,000, because you don't want to be exposing it to the market. That's where risk management kind of interrelates with it. But then it's also how you manage the money you earn. I also teach my students, interrelated again with risk management, once you have learned to double a live account, triple a live account, take out and withdraw the principal that you first deposited in the account so it's no longer at risk, and place it in a backup plan. There are other areas of money management as well. This is a vital pillar if you're going to manage well what you earn to keep it. The fifth area is dealing with time management, lifestyle, how you organize your day and your trading day. And this is variable because it depends on the person, on their existing lifestyle, on the job they have. It depends on their family circumstances or their marriage. It also depends on what time zone you live in and when the markets are opening. It's a matter of learning how to organize your trading day and your time so that it is conducive to profitable, productive trading and still allowing you to have a healthy lifestyle along with it. The sixth area is trading psychology. You can have a great trading plan, you can have proven strategies, you can have all of these other prior pillars in place, but if you don't have the proper mental psychology, you're going to be subject to emotions that will interfere with your ability to trade. So trading psychology is all about learning to manage emotion, learning how to think through and logically execute a trade plan that you have thought out outside of the trading environment. It's vital because that, in the end, once you've learned everything else, your psychology, how you think, how you feel, how you deal with your emotions as a live trader is going to determine whether you'll be successful with all of the other great information you've learned and put into place. The seventh area is portfolio management. Now, this is also very, very important because so many traders get to start out with an individual account, they start trading, and when they do become successful, they only learn too late how important it was to have thought ahead of time about tax gains. You know, when you're trading live money, there's earnings there, and someone's going to want to tax you on those earnings. Unless, of course, you thought ahead of time as to how to set up your account in the proper types of legal structures and to manage those in a method that will minimize and in some cases even eliminate tax gains or the taxation on those trade gains. Those are essentially the 7 pillars of what I call a successful trader, and all of them, to be the most well-rounded trader, are necessary if you're going to be able to not only learn to make money in the market, but keep what you've made. Hey, this has been Tips on Trading with Stephen Story. I hope you've enjoyed it.